Grain started higher on Tuesday, but saw markets turn around midday. Where are things headed now? Michelle Rook asked that question in Markets Now.
DuWayne Bosse with Bolt Marketing joining us. And DuWayne, we ended off our session highs in corn and soybeans. It looked like we got maybe a little profit taking when we got above $6 on D's corn, $13.50 on November beans.
Yeah, profit taking, producer selling, probably all of the above, and probably all justified too. That was a heck of a rally we had last week, Michelle. And I know through this office too, we were pushing producers to start making some new crop sales. We weren't smart enough to do it before when they were a little bit higher, but this is a heck of a weather scare rally that I believe needs to be sold.
No doubt. We've rallied over $1 off the lows and corn over $2 in soybeans. So do you feel like, what percentage do farmers need to be selling on this second chance rally?
Well, every farm is so very different. Depends on whether you got storage, cash flow needs, things like that. But just for what we're going off of here, we're about 50% hedged on new crop corn right now off of this rally, and just got up to 30% on new crop beans. The bean situation could still be tight, especially if we lose some acres on the June 30th report. But the corn situation, boy, I'm just seeing lower prices can fall, even if we reduce the yield quite a bit due to a drought.
So this is a supply-driven rally. So how long do those normally last?
Short term, usually it's stair step up and escalator down, or I should say elevator shaft down is what I should say. And that's probably what happens here too. I mean, we rallied sharply last week. Still no rain really in the forecast for Illinois. That's in the 5-day forecast anyway, the one that I pay attention to closely. But I just got this feeling that this is going to change. There's no heat dome of doom. So I think once you get that forecast for rain in Illinois or a better crop conditions report, which maybe happens next week, then this market will go down fairly hard, I think.
Well, a lot of times markets top when the news is the best. And obviously we do have some demand issues we have to work through too, right?
Well, you're exactly right. And that's why I'm selling this so hard. Like you said, this is a supply driven issue. Demand is really relatively poor. I think if USDA, reduces maybe even some acres in corn or maybe reduces the yield quite a bit, I still think on the opposite side of it, they'll just reduce the demand the same amount. I still think we end up with over 2 billion for an ending stock and probably a December corn market below 5, maybe 475-ish come fall.
Okay, so something to be sold. Thanks so much for joining us, DuWayne Bosse with Bolt Marketing. That's Markets Now. We'll have more AgDay coming up.
For marketing advice, call Bolt Marketing, a futures and options brokerage firm.